Your car or home insurance renewal shows one neat monthly price. It might look affordable, but before you click renew, ask one question. What is the total cost over the year? Because paying monthly for insurance is not just splitting the same price into 12. Sometimes it's premium finance, and that can mean APR, interest, a deposit, fees, and cancellation terms. This is not a video saying never pay monthly. For some people, monthly payments are the only realistic way to keep cover in place. But before you renew, you need to know what the monthly price is really costing you. This is before you sign UK. We check the small print before ordinary people commit. And today we're checking what paying monthly for car or home insurance can really cost. When you pay annually, you usually pay the whole insurance premium upfront. One payment done. When you pay monthly, there are different ways it can work. Sometimes it might be interest-free, but often you're not just paying the same bill in smaller chunks. You may be entering into a credit agreement to spread the cost of the insurance. This is what premium finance means. The insurance is the product, the monthly payment plan is the finance, and those are not always the same thing. That is why the cheapest looking monthly payment is not automatically the cheapest policy. The real comparison is not, can I afford this monthly number? The real comparison is, what will I pay in total by the end of the year? So pause here. If your renewal shows one neat monthly price, do not just assume that's the whole deal. Look for the full breakdown. The annual price, the deposit, the number of instalments, the APR, the total amount payable, and any charges if something goes wrong. That's the small print that matters. Here is the simplest way to think about it. One policy might have a lower monthly payment. Another policy might have a higher monthly payment. But that does not tell you the full cost, because the monthly option might include a deposit. It might include interest, and it might include fees. And it also may have charges if you miss a payment, change the policy, or cancel early. So the fair comparison is not monthly payment versus annual headline price. The fair comparison is total annual cost versus total monthly cost. That's the number that matters. Now, APR sounds boring, but for this video, we'll keep it simple. APR stands for annual percentage rate. It's a way of showing the cost of borrowing over a year, and it can include interest and certain fees. So when your monthly insurance option shows an APR, that's not just a decoration. It's telling you that the monthly option may cost more than paying up front. But there is one trap here. Do not only look at the APR, look at the pounds as well. A high APR on a short agreement can sound scary. A lower APR on a bigger amount can still cost more in pounds. So check both, the APR and the total amount payable, because the number that hits your bank account is not the APR, it's the total cost. Next, check the deposit, but it can also mean more is being financed over the year. That can change the total cost. Then check the fees. Is there an arrangement fee, an admin fee, a missed payment fee, a cancellation fee, a charge if the direct debit fails? Even a monthly option that looks simple can still have event fees if something goes wrong. So the question is not just what's the monthly payment, the question is what happens if I need to change, cancel, or miss a payment. That's where the calm looking renewal can become messy. This part matters most for car insurance. If you miss insurance payments, the provider may ask you to catch up. If arrears are not dealt with, the policy can be cancelled. And if your car insurance is cancelled, that can create a much bigger problem than just a late fee. You may be left trying to arrange new cover, you might have arrears to clear, and if you drive without valid insurance, that's not just expensive, it's illegal. So before choosing monthly payments, check the consequences. What happens after one missed payment? How much notice do they give? Are there default charges? Can the policy be cancelled? If you cancel early, do you still owe anything? Does the finance agreement end automatically, or do you need to contact someone separately? You're not looking for reasons to panic, you're looking for the rules before you rely on the payment plan. The regulator has looked closely at premium finance, and the picture is not simply monthly bad, annual good. Premium finance can help people keep essential cover when they cannot afford a full annual payment up front. That matters. The FCA has also said costs have fallen since 2022 and that many firms have reduced charges. So this is not about assuming every monthly insurance deal is unfair. It's about checking whether your deal makes sense for you. Because even when the market improves, your renewal can still have details that matter. So before you renew, do this 5-point check. First, what is the annual price if you pay in one go? Second, what is the total amount payable if you pay monthly? Third, what is the APR? Fourth, how much is the deposit and how many payments are left after that? And fifth, what are the fees and cancellation terms if you miss a payment, change policy, or cancel early? Before you renew, compare the total cost. Check the APR, check the deposit, check the fees, and check what happens if life gets in the way. Because paying monthly for insurance can be useful, but before you sign up for it, know what you're actually agreeing to. This is Before You Sign UK. We check the small print in claims, contracts, scams, and money decisions before ordinary people commit.